Hey, what is going on, everybody, and welcome to Listen Money Matters. Home is where the heart is. Well, the heart is located inside the pericardium. My name is Thomas, and I'm here, as always, with my good friend Andrew. Andrew, how are you, and what are you drinking today?
Dude, I am especially good because I have a Golden Monkey from Victory. It's north of 9%. It's my beer of choice from the beer garden by us.
Okay. It's an especially good beer for you, then?
Yeah.
I just have bubbly water, once again.
LaCroix?
Is my butter? Yeah, my LaCroix. I was listening to another podcast where they also always drink LaCroix, and apparently one of the people listening didn't think it existed.
They're just like a made-up...
product, yeah. No, it's real. Anyway, guys, today we're doing another real estate-focused episode, and really excited because we have Gary Beasley, who is the CEO of Roofstock.com, and they are a marketplace for buying or investing in single-family homes. And Andrew, I know you've actually have some experience with Roofstock, so I'm excited to dig in, and I'm sure you've probably got more questions than I do since you've been in the trenches, so to speak.
Yeah, so I have one that I've closed. I have another that I'm partial of the way through, and I'm obsessed, I guess if you'd ask my wife. And so I selfishly wanted Gary to come on to answer all my questions.
Cool. Well, Gary, welcome to the show.
Hey, great to be here, guys.
Yeah. So I gave me a little bit of a introductory description of what Roofstock is, but I mean, you're the CEO, so I would love to get just a bigger overview of what you guys do and also how you got started.
Sure. So we're a marketplace, an internet marketplace for single-family rental home investing. So the idea is to bring buyers and sellers together in a really efficient way to allow investors to buy homes that are already cash flowing. They're leased. So to date, there's about $2 trillion of assets in single-family rental homes. It's about 15 million rental homes. And there's really not an effective way besides Roofstock to buy and sell them with tenants in place. And we're the kind of the first marketplace to do that. We have very low cost for our sellers and buyers, so we try to squeeze out a lot of the inefficiencies and the friction in the transaction, and we bring many years of investing expertise in this asset class to bear from having built platforms in this space ourselves. I most recently was running a public REIT called Starwood Waypoint. And it was one of the larger single-family rental real estate investment trusts. So had been involved in the space for many years as a principal, and we owned and operated about 15,000 rental homes. I left about a year ago with my co-founder Gregor Watson, who was running a similar platform, with the idea of really making it very efficient for groups like my old company and retail investors to be able to sell these homes efficiently and also buy them already cash flowing as opposed to having to buy them through traditional channels.
Okay. And I'm guessing you had individual investors using the REIT, right? It wasn't like bigger groups at the time?
When you say individual investors using the REIT, can you clarify what you mean?
Like just people like me and Andrew at the old one, right?
Yeah. So at the old company, we were an institutional owner, so we had public capital and we were buying homes and we were leasing them out to tenants. And so the way to invest in that, you had to buy shares in our company. Mm-hmm. You couldn't buy the assets directly. And I think for a lot of people, as they think about how to invest in housing, you could either buy a home like say Andrew did recently through our site and then own it directly for the cash flow and the appreciation. Or you could buy a share of a real estate investment trust like my old company, which is a fine kind of thing to consider as well. It's a different type of investment. You're really investing in a stock there as opposed to having direct real estate ownership. The thing I think you should own REITs too as part of a stock portfolio, but I think the thing that's really intriguing about what we're doing is you could pick your markets, you can pick how much debt you want to use. You could be really strategic about building your own portfolio and growing it over time, and then you can control when you'd like to sell it. But it's a great way to just incrementally build wealth over time.
So Gary, there are companies, they call themselves, I guess, turnkey rental companies, like Memphis Invest. And, they bill themselves as you show up and we just give you a house that's cash flowing. We've renovated it and all that good stuff. How do you guys differentiate from that?
Yeah, I'd say that there are definitely similarities in that you're buying a home that's already cash flowing. I think that the difference is those companies tend to be very specialized in certain, in say a market. They're a local expert in a market, and if you work through them, you have to buy homes in that market. Over time, we're adding new markets every month, and so you'll be able to build really a national portfolio through Roofstock. And we have multiple sellers we're working with. So when you're working with a turnkey operator, you're buying everything from the same party. And that's not necessarily good or bad, but it's whatever inventory they specialize in and have. It tends to be pretty specialized with each strategy, each of those operators, where the beauty of a marketplace is we could have multiple types of sellers and multiple types of buyers. So you could come out onto our site and find high-yielding homes. You could find homes that are lower yielding but may be in really nice neighborhoods that have really nice appreciation prospects. You could have, there's in a marketplace, oftentimes there's something for everyone, and it allows you to sort of see, build a balanced portfolio and maybe buy some homes of different types.
Since you're a marketplace, would you say that your company could actually encapsulate other companies that do this kind of turnkey real estate investing, or are they two separate kind of things?
Yeah, absolutely. So, in fact, we've worked with a couple already, a couple of turnkey companies who have either bought homes off of our site, or and we've even talked with some of them about helping sell some of their product through our site. Because over time, we anticipate we're going to get more and more users, and because we'll develop a national following, it could be good for some of these more local groups to get exposure to new investors through us. And so we're happy to think about partnerships like that. But certainly what we've found is some of the homes that we've sold have been purchased by some of the turnkey players who would want to buy it and then maybe do a significant upgrade and reposition the house to a kind of a higher rent.
Yeah.
One of the biggest questions I had when I found out about you guys was, why are people selling me these properties? Because you guys provide a full analysis, which we'll get into. There's a tenant in there. The numbers look pretty good. You've already negotiated the price down, for me. Why is this company selling to me? It seems crazy.
Yeah, well, most of our sellers right now, there are a few reasons that the sellers are selling homes right now. We're starting with inventory primarily from some of the largest REITs and private funds who have bought tens of thousands of these homes, renovated them to a high standard, leased them up, and have now owned them for oftentimes 3 or 4 years and maybe looking to just get some liquidity. And it's a really efficient way for them to do that, selling through Roofstock, because they don't have to vacate the home and pay a traditional broker fee and all that kind of stuff. So any large fund or REIT oftentimes will periodically sell a certain amount of their homes just to sort of get liquidity and maybe either remit that capital back to investors or buy homes in a different market to sort of rebalance their portfolio. Also, what's happened is there have been a number of large portfolio acquisitions amongst the biggest players and mergers. And when that happens, oftentimes you have an overweighting of homes in a certain market because two companies have merged, and you say, well, we have 1,000 more homes than we'd like to have in Atlanta. Let's sell those and let's buy homes in a market where we might want more exposure. And then you also have some of these groups that want to reposition portfolios. For example, we have one group that wants to really move up market in their average rents, and so they'd like to sell some of the less expensive properties that have lower rents, which is great because we have a lot of investors who like those less expensive properties and the yield associated with them. So it doesn't mean that there's anything wrong with the property. It just means that the investor's strategy has either changed a little bit, there's been a change of circumstances, or they're just looking for some liquidity.
So when Thomas or I have to sell our REIT because whatever, we want to buy a home on Roofstock or something.
Yeah.
We're essentially through Roofstock getting the spillover of professional institutional investors, so that they're able to give us our money back when we sell our REIT.
That's right. I mean, that is part of it. They're always raising capital as well. So I'd say, mostly what REITs will do is raise debt and equity to raise capital, but they will also selectively sell, maybe 5 to 10% of their assets a year. A lot of these REITs will do, and it's not just the big boys who are providing the inventory to us now. We started that way, but we're actually starting to work with other groups who are smaller owners who have good portfolios, good homes that they want to sell. Because over time, Roofstock's going to really be a marketplace that caters very much to retail investors on both sides. But it's a lot easier for us to get high quality inventory right now from some of the really large players to get started. But to give you an idea how the industry is structured, which I think is kind of interesting to appreciate, there's about 15 million of these rental homes, and only about 250,000 are owned by the large institutions. The rest are owned by smaller, more mom and pop investors. And so we're starting with the institutions for our supply, but over time we'll be building tools and developing the relationships with smaller owners so we could really open up a lot more supply avenues down the road.
Yeah, that makes sense that you'd be able to accelerate faster when you build a partnership with someone who has more homes to put on the marketplace.
Yep.
Now, when you get a home, say I'm an institutional investor, I have some that I'm looking to get rid of. Do I just give them to you and then it's, like a 1 minute delay and then it's kind of on your marketplace?
No. It takes a little bit of time. I would think about it. Our marketplace is very much a curated marketplace today, meaning that inventory has to pass through our certification process before it goes on our site. And Andrew, since you purchased a home and have another one in the pipeline, you're familiar with this. But we have third-party inspectors who do a complete walkthrough and visual inspection and create a report on the site, on the home. We do valuation reports. We pull title. We do an internal a 3D map, which is a virtual tour of the interior of the home, so you can see what it looks like without furniture. We certify the tenant as well as the local property managers, and all this is in our data room. So that process takes a couple of weeks from when we actually initiate it to getting all that work done, packaging the home up with photos and all that, and getting it listed on the site.
So, because I'm looking at a property on your site and it says Roofstock certified, this property is certified. So I'm guessing it's gone through the process, and for lack of a better term, would you say you guys are putting your balls on the line in terms of that this is a good property, or that it is at least what you say it is?
Sure. So what we're doing is we're not taking every home that's given to us and putting on the site. So for various reasons, properties won't make it. Either they don't pass the inspection, or it may not be in the right price point, or the yields could be too low, or the seller might be looking for a price that's too high relative to what we think the fair value is. So that is our job. We like to say we're kind of one throat to choke here. If you have issues with the property, you call us. I mean, we do have a 30-day money-back guarantee. So if you buy a home on our site and you're not happy in the first 30 days, we'll sell it for free for you. And if we have to sell it for less, we'll cover the difference. And if we don't sell it in 90 days, we'll buy it from you. So we haven't had anyone yet call us on that. We're happy to, but we're happy to stand behind it. So that's why our certification we feel very strongly about. We're not putting homes on there that we don't feel very, very good about, and that we're backing it up with our guarantee.
Do you do any sort of due diligence on your buyers? I mean, if you have a 30-day money-back guarantee where you're willing to take a loss, I guess that exposes you to some risk on the buying side too.
Well, remember if the buyer actually buys the home, that means they've had the cash to buy the home. So it would just be now if they trash the home, it's not covered, right? So, but they have to buy the home and keep it in the same condition it was when it was purchased. So it's not sort of a free option to buy it and trash it and sell it back to Roofstock. They're not going to make any money doing that anyway, so there's really no reason to do it. It's really designed to give buyers peace of mind, because we are asking people to make a leap and buy these homes sight unseen, which is we could talk about why people are doing it. I mean, I bought thousands of homes sight unseen at my old company. You rely very much on data, and there's really only two reasons we discovered we concluded you needed to get inside a home typically, and it's one to inspect it to see if it needs any work, and if so, how much, and two, to see if it's a decent floor plan or if there's something really unusual about it. So we tackle those with our inspection reports and with our 3D mapping, and the 3D floor plan. Everything else you could see through Google. There's school and crime data. You can do all sorts of demographic and research and look at whatever you're looking for in terms of an investment can be done remotely. And so the idea here is to open up the whole country to investment from really anywhere in the world. And right now, about 70% of the rental homes are owned by owners who live within an hour drive of those homes, which, as you think about, is a terrible diversification strategy. And if you live in the Bay Area and you have a tech job and you own a home here, and you own a bunch of rental properties here, you're tied to the same economic cycles. And so what we're actually seeing is a number of people wanting to sell homes near where they live and redeploy that capital in other markets that might be counter-cyclical to where they live.
Yeah. I'm really interested in this 3D tour that you mentioned. How do you guys generate these?
Yeah, so we found a local tech company that we partnered with to kind of work on this, and so it's done with an iPhone with a little robot, and it basically takes images of the entire home on the inside, and it stitches it together in an animated video that looks very realistic. It's actually animation, but it's very precise to the actual dimensions of the room, and even matches colors and finishes pretty well, and then generates a very cool kind of 3D model as well, so you could see it. Because what we were struggling with was, when we were first getting started, how do we show people what the floor plan looks like when someone's living in it? It's got people's things everywhere, and there's also privacy issues with showing real video of where someone's living. So we found this company, we put together a partnership, and it's going really well, and it's one of the most heavily used portions of our site. People really feel like they get a sense of what these homes are like. I don't know, Andrew, when you bought yours, did you do a bunch of these 3D tours?
Yeah, I obsessively researched it. You guys had an enormous amount of information, and I found that it pretty much matched everything else I checked. I was looking at like House Canary, Zillow. I thought it was really cool because you see the individual pictures, but it's really hard to piece it together as the actual place, like what's what room, what wall.
Yep.
Before you guys, I had purchased a property through this guy, and it wasn't difficult work, but it was certainly a lot of work to close on it and get a tenant in. With you guys, I did almost nothing, which was probably the most delightful part of it. Could you talk about your process a little bit?
Yeah, so it's great to hear. We're designing this to be very, very easy for the investor. Again, trying to separate operations from investing. You should be thinking about how you want to allocate your capital, what markets you want to be in, what types of homes you want to be in, and let us deal with the details. And so I'm just curious, what market did you buy this home in?
So my first one and my second one are Georgia.
Georgia. Okay. So when you buy a home out of market, and you typically need to fly there and look at properties, they're vacant, so you don't really know what they'll rent for. You have to find local resources to lease it up, sometimes renovate it first. You have to find a good property manager, and sometimes maybe have to make multiple trips to do that. And then you're kind of out of market, and it's a little bit harder to manage. What we have done is we built the whole company around being able to do this remotely. And so we've got certified local property managers who will take over the property management of those homes. What you're buying on Roofstock is already leased, so there's a tenant in place, so you don't have to worry about filling it. And the local property managers are local experts, and we typically have a couple of different choices for you of firms we've vetted. All of those groups have gone through our process of certification. They manage a lot of homes. They've got plenty of experience. We've negotiated good fees and service agreements with them, so they'll give basically institutional level service and pricing to individual investors because we're giving them plenty of business. And if for some reason they don't do a good job, we can hold them accountable because we have visibility into how they're doing. So it's kind of like getting the collective buying power of everybody going through Roofstock and negotiating power to hold these local property managers accountable for good service.
You know,
That's
the
awesome.
property manager was the single thing that kept me from even getting into rental properties for the longest time, because it, like, you can only find horror stories. So there's like very few people that are online like, I love my property manager, they're so great. And first of all, my first property I pay 10%. The one that I went through you guys, I pay 6%. And the guy treats me like a king. He responds immediately, which I love, and he actually has like an online system where I could check like my statements and stuff like that. Could you maybe go into like what the property manager certification process is like, and what it takes for you to recommend someone?
Yeah. So each market we probably interview between 8 and 12 property management firms. It depends on how many are there to pick 2 or 3. And so we tend to want to have groups that have a critical mass, tend to manage, many hundreds or ideally a few thousand homes in that market. We will want to make sure that they have good customer satisfaction ratings, that they have a good accounting and reporting systems. And they have good leasing and repair and maintenance operations. And so we have a pretty thorough process that we vet them with. And then we end up selecting 2 or 3 of them to work with in each market, negotiate the kind of the fees. It tends to be between 6 and 8% generally in our markets. Each market's a little bit different. And we're very transparent. We make them be transparent about all their fees. Do they mark up repair and maintenance? What are their leasing fees and all that kind of stuff? So we're very clear in making sure that everyone knows what they're getting into. And I think that helps, because if you're doing this as an investor on your own, you don't really know what market is. It can be easy to be taken advantage of, where here you've got kind of the collective wisdom of our management team has been doing this for many years. We know the nuances of the business, and because we've got this kind of collective buying power and negotiating power, we can again pass those sort of savings along to investors.
That's actually awesome. I think it's really reassuring. What happens in the case that a property manager does need to be replaced? Is there a protocol for that, or? Yeah, no, it's actually it's not that hard to do. I mean, there's a property manager transfer process that we help with if for some reason, because what ends up happening is right now the homes that are being sold on the site, almost all of them are being transferred to a new property manager, which happens to be one of our certified ones. Mm-hmm. So they would go through and there's a process for transferring everything over. It would be the exact same thing. It would be from whatever the existing property manager is to one of our new ones. And we get involved and help make sure that goes smoothly. There's certain protocols for doing that, but it's pretty easy to do.
we're hoping that there's not going to be a need for that as long as people are using our certified property managers. I know not everybody does. Some people might want to self-manage, which is fine, or might want to use a different property manager who they might have some familiarity with, and that's fine. We just can't hold those people accountable to the same degree we can to the ones who are certified and sort of going through our system. So, but we're happy to, if anyone tries it the other way and says, hey, you know what, I actually want to use one of the ones you've certified, that's no problem. We could make that happen.
Cool. So I guess people do have a certain degree of control.
Totally.
Over the buying process.
I mean, what we really want to do is make it easy. And some people want control and some people want ease. And we want to be able to offer the right level of service for people. If you come to us and say, listen, I want you guys to recommend a property manager, all these other things, that's great. We're happy to do that. If you say, listen, if you want to select everything yourself because you have a certain design on all the particulars, that's great too. It's the beauty of a model like ours. It's kind of it's not a one size fits all. It's very very much the right level of service and involvement depending on how involved you specifically want to get. In fact, we recently, at one end of the spectrum, from an ease standpoint, we just recently have offered the first fund on our site where if you didn't want to actually buy a home or your own portfolio, you could simply put money into a fund that's going to go out and buy homes off of Roofstock. So you would have just direct exposure to, say, 100 homes in a number of different markets that are professionally managed in a really kind of low fee structure environment. So that's a little bit like a REIT, if you will. It's kind of like a mutual fund of homes. You don't get that direct exposure to each home, and you don't necessarily, so you can't say make a bet on Atlanta or Orlando, but what you get is exposure across a bunch of markets, and it's a minimum $25,000 investment, and then anything above that, and you get that, and then it's just a very passive way to get exposure.
How long do you stay with us after the transaction? So I know there's like a 30-day money back guarantee, which is awesome. But if it's like a year down the line, I'm just like not having a good time, and I need maybe I need a new property manager, or I don't know, I just need someone with experience to like advise me. Like, do you guys stay involved, or you're like, sorry, it's over?
We do. Yeah, we do. In fact, what we're building right now, and we haven't gone live with it yet, but we're the plan very soon is to offer an asset management tool, if you will, where your property statements will show up on Roofstock, and you'll be able to come every month and see them there. We'll have all sorts of we'll be there for you to make sure and sort of monitor things with your property manager and sort of make sure repairs and maintenance are in line with what they should be. That if there's a renewal, that it's being rented at the right rates, things like that. And so we'll stay involved on an ongoing basis and do that for you. And at least for now, we're not charging for that service. We're happy to do it for free, because what we want to do is we want people to be comfortable and happy and have good outcomes on their investments. And over time, we'll make that more robust. We'll add more bells and whistles. But absolutely, I mean, we are here 24/7 for people who are investing through our site, well beyond the transaction itself. The idea is to make this an ongoing relationship, whether you buy one home or 100 through us.
Gary, if I understand correctly, I can pick a home. I will pony up the cash, get financing. You guys, you carried me through the process of my first one. And then I can just sit back and I can let you guys deal with it?
That's right.
I'm really curious to know, what are some of the things that people should know going into this? Because we've done real estate episodes in the past, and we always emphasize that you need to do your due diligence and know how to manage a lot of different things, even if you have a property manager. You guys do a lot of that, but you're going to be, as an investor, you're going to be holding that asset for a long period of time, and some things may come up. So,
yeah,
I'm guessing people shouldn't just come in with, a bunch of cash and no knowledge and make a purchase? What should they know for long-term success?
Yeah, I think one of the things is just to think about your investment horizon. If you're just looking to invest for a few months or a year, it's probably not ideal because these are really designed to be owned for the medium to long term for the cash flow and the appreciation. So investment horizon's one. If you just want to put money to work for 6 months, you should probably buy a REIT. Single family rental homes are quite attractive because they are the most liquid of all real estate asset classes. They could be sold relatively quickly, either to another investor or to an owner occupant. I like to think of these rental homes as sort of like an apartment building that's mapped for condo. So if it becomes worth more to an owner occupant in the future, you could let the lease run out and sell it to someone to live in it. Or if it's worth more to you for the cash flow or another investor for the cash flow and the appreciation, it can be sold that way. So I think it's unique in that regard for a real estate asset class. And then I think people should always keep in mind too, there will be periods of vacancy. So you want to be prepared to have a little bit of downtime if there's a month or so where the rent isn't coming in, but you still need to pay your mortgage, or you need to put a little bit of money in when a tenant leaves to fix it up to release it. So you want to have a little bit of buffer just to make sure you can do that. What I often do or recommend for people is to put kind of a small reserve aside. Maybe it's 1% of the home or something like that. It doesn't necessarily need to be in a separate account or whatever, but sort of earmark some money so in case you do need it, it's available. Because that is you are getting the upside of owning real estate, but when you own real estate, you just have to always be prepared for those times when there might be a little bit of vacancy.
Yeah. And how do people get notified about all these things that happen? If they buy the thing through the marketplace and the property manager's already you managing that property, is that the person who's going to email you and say, hey, we don't have a tenant this month, or hey, we need to put some money in?
That's exactly right. That's a big part of what the property manager does, is to stay on top of that. So they do the rent collection. They'll typically do the leasing and the repair and maintenance and all that. And so they'll be the ones to let you know if there's an issue. Again, that's something that as we release our asset management platform, we'll be notified of as well, and we're happy to stay on top of for our clients. Some people want to be very close and talk to the property managers directly. Others will say, hey, Roofstock, I want you to deal with that, and we're happy to keep you in the loop and just manage that for you.
So is there basically going to be a dashboard at some point where the investor can log in and see this event happened?
Exactly. The rent's been collected, or this is what's coming up. I mean, imagine think about sort of your E-Trade dashboard for your real estate.
Yeah.
Here's my properties. Here's what I bought them for. Here's what they're worth today. Here's how much cash flow I've gotten. Here's perhaps here's the forecast in these markets for the next 3 to 5 years. Here's when my leases are rolling. Here's what you can imagine over time, better and better data, just to kind of help you understand what you've got and think about how you might want to optimize your portfolio.
Gary, we started talking about real estate maybe like 5 months ago, and I've kind of been obsessively researching it, and it took me quite a long time to get into it. And a big part of it for me was the returns they're dizzying. It's like nothing I've ever seen. And I really truly was like, this can't be a real thing. I learned about the power of leverage, but I was wondering if you could maybe talk about some of the risks. I mean, am I crazy? Like, what am I missing?
Yeah, well, it's with anything. I studied economics. You don't get return without risk, right? So, so that's true with any investment. It's certainly true with real estate. So the risks are largely controllable. Not entirely, but I'll tell you why. So there's the risk of peril, for example. What if if there's a peril, your home burns down, you want to have insurance, right? And we make sure you've got insurance at closing, as will your lender. So a lot of the physical risks are insurable. There's the risk of a market downturn. So we had, during the downturn, home prices dropped meaningfully, right, in 2007, 2008. So you had prices drop 30, 40% in some of these markets. Now, what was interesting is rents stayed pretty stable, and in some markets went up. So if you owned a rental property, even if on paper the value goes down, what we found was, because it was a real estate downturn, it was almost a counterintuitive thing, but there were a lot more renters. There were, millions more rental households, and that created great rental demand and stable and growing rents. And so that was almost a little hedge against a downturn. But you do, obviously, real estate prices fluctuate, so you don't want to be overly leveraged. That's where you could risk kind of losing your property if prices drop too far. Now, one of the things in this asset class, you can leverage up to, say, 80%. It's not like when you're buying an owner-occupied home, you could borrow, 95 or 97%, or back in the heyday, people were borrowing more than 100% of the value. That's not happening here. So there's a nice cushion. There's a nice equity cushion at purchase. Rates are low today. So you could lock in 30% or 30-year money, fixed money, for in the 4% range, and have a nice accretive financing. So that's, I think, a way to kind of, if you want to own these things for the long term, you could insulate yourself very much from the market fluctuation risk in pricing by locking in fixed rate financing today, planning on owning these things for a while, and being able to ride out any sort of downturn. And then there's the risk of vacancy with any investment in real estate. The good news about single family rentals is the average tenant stays 3 to 4 years. So the turnover tends to be relatively low, less than half of what you see in apartments. The occupancies of all of the larger platforms are in the mid to high 90% on an annualized basis. So there's big demand for rental housing. There's a lot of cyclical trends favoring rentals today, where it's very difficult to get financing for people. A lot of people, millennials in particular, like the flexibility. So there's a lot of rental demand. So the risk of vacancy is offset, I think, to a large degree by the strong and growing demand for rentals. So I would say those are kind of the biggest sort of risks that come to mind, and how to sort of think about them.
It seems like everything, you guys have tried to think about every part of the process and make it easier. You mentioned, you just have to have the cash and bring it in. Is that something you guys are thinking about moving into as well? Or are you going to leave that to the investor when it comes to getting a loan for the property?
Yeah, so we're definitely helping people get financing. We've got some financing partnerships where we will connect investors, depending on whether they're an individual or an LLC or a foreign investor, with lenders who specialize in those types of loans. And because we have good relationships, we could sort of hold them accountable for good service and timing and treating our customers well. So Andrew, I think, did we help you get your financing on your first one? Did we connect you with a lender?
You guys didn't, and I think only because I was researching it and I kind of just picked someone before. And
Okay.
you're actually making me wonder if I should email Rebecca and see if she can get me a better deal. But it was very interesting. So I, on my first property, I went through you guys, and the mortgage company, they're like, hey, like, we could help you find insurance. So they go, they find some insurance, they come back, and Rebecca actually did it in tandem. And I got a better deal in terms of what I was covered for and a lower price. And the best part was she pretty much concierged the entire deal. Like I put money on the table. I mean, I worked with the financing company, giving my finances, and she pretty much handled the rest.
Great. I'd love to hear it. That's her job. So it's wonderful to hear, because it is a complicated process. It's not something you do every day, but it's something that we do every day. And so the idea very much is to give you the benefit of that experience and hopefully make it make it easy and get you, point you in the right direction. It's otherwise pretty tough to navigate, I think, transactions like this without a good river guide, which is what we try to be.
So since you guys are helping people out at every different stage and staying with them, what's your profit model like?
So we make our money primarily from listing fees from our sellers. Now it's a lot less than traditional brokers charge, but it's plenty for us to make money. So we charge less than half of what a traditional broker would charge them, but because it's our own marketplace and we don't, our costs are a lot lower, we're able to charge less, and then they tend to be comfortable listing their home for less on our site because the cost of selling through us is less. So that's when we do charge our buyers a 0.5% marketplace fee. We do have some promotions sometimes where the first transaction will be less, but that really covers our certification costs. So it's primarily coming from our seller fees.
Is that 0.5% of the monthly revenue?
No, it's just a one-time 0.5% of the purchase price.
Gotcha. Cool. So Andrew, basically that transaction was done and now all the revenue goes to you from those two properties, right?
Yeah. And I mean, not to brag or anything, but my cash on cash is over 25%. So I'm a little delirious.
Love to hear it. Yeah.
I mean, this is like doing more to convince me to get into this than anything else has, because the other episodes we've done, it's like you got to fly out to the market and you got to go inspect properties yourself. And I mean, I'm willing to do that, but it's hard when you also are spending 80 hours a week running your own business and doing all these other things. So I'm impressed.
Yeah. That's the idea. It's kind of the idea behind the name Roofstock was you should be able to buy homes just like you're buying stocks, and it's that kind of when you buy a company stock, you don't physically fly to the headquarters and check it out. You should be able to do the same thing with property, whether you're in New York City or Beijing or Florida. Buying a home in Atlanta should be just as easy.
So how did you guys choose your markets? Are you going to expand to new ones?
Yeah, so we started in several markets in Florida because there's just a lot of demand and supply from investors in Florida. It's a low tax state. There's a lot of in-migration, job growth. There's some physical, geographical barriers that create opportunities. So Florida is just a great market to get started. And then we had some experience here in the Bay Area. And so we launched in Northern and Southern California. By the way, yesterday we sold out of all of our California inventory. So we had 32 homes here, and they're now all pending. So we don't currently have anything for sale in California, although we're looking to add some more. We're in Atlanta, which is a very big and robust market, very attractive, affordable, good yields, good appreciation prospects. And then we're launching soon in Las Vegas, and we're looking at several other markets. I think you could expect us to go into a new market here between now and the end of the year in approximately every 4 to 6 weeks.
Wow.
So rumor has it you might move into Indianapolis?
I've heard that rumor as well. Yes, yes, it's I'm from Indiana, so I have an affection for Indianapolis and Indiana in general. It's a really good market. We're looking at it. Yields are good, very stable. It's one of those markets that's not likely to have really high appreciation, but it's one that has nice yields, affordable price point, kind of steady. So what we want to be able to do is offer investors choices, right? And so you Andrew, bought a very high yielding home. There are some investors who aren't as concerned about the current yield and just want a home that's maybe a yield might be quite a bit lower, but it's in a really higher end neighborhood with good schools, and it's going to be buying it more for appreciation or low risk. So think about it as more like a I think in terms of bonds, you could buy a AAA bond or you could buy a high yield bond. High yield bond's going to have a bit more volatility and risk, but you could get considerably higher returns. And a AAA bond's going to be, much lower risk and lower return, and everything is sort of in between. And so I think as long as investors are looking for all those types of products, we'll continue to offer those different kinds of products as well. And it may be that your next one, Andrew, may end up being more of a middle of the road current yield, but in a market that you feel really good about owning, where 5 years from now it's going to be significantly more valuable. That's I think the beauty of this asset class is you could put together your own strategy. You can modify it over time. You could sell homes once they've appreciated really efficiently through Roofstock and redeploy the capital into other markets that might be earlier in the recovery.
Are you guys profitable?
No, we're not planning on being profitable for some time. We're a growth company. We're venture backed, so that's not that we've got plenty of capital, and we're profitable on a transaction, on a per transaction basis. We make money, but we're really building a company here for the long term, and so that's not an objective right now.
So I have one last question. You talked about building your own strategy, kind of on a holistic view of it for the individual investor. And Andrew, you can take this too. I'd be curious to know what both of you guys think. What's the right percentage of your investment portfolio to have in real estate, to have in single family homes like this? And when should somebody start? Because I probably wouldn't tell like an 18-year-old kid coming out of college, don't invest anything in different ways, like go straight into real estate. Or maybe you guys would, I don't know.
I think it's a very individual decision. Andrew, maybe talk about how you think about it. So I guess it really depends on everyone's personal situation. I'm a big fan of diversification. I certainly wouldn't want to have all my money in the stock market or all of it in real estate. I think there's rules of thumb that different financial advisors have and different financial planners, and so I think people should think about it, do their own research, and see what kind of exposure they want. But I think it's very much of you want to have a diversified strategy that's got some assets that are not correlated.
From my perspective, so I definitely agree, and I have a lot in tax advantage accounts like IRA, 401k. I have taxable accounts, and what really pulled me in was the cash flow. I have started to lean really heavily towards just business. Listen Money Matters, and I kind of view my real estate setup as a business. And I guess just at this stage of my life, I feel like I want to prioritize cash flow as opposed to just assets only.
So you want to have a greater percentage of your investments in cash flow eventually?
Well, okay, so my actual goal right now is, I don't know if this is a thing, but I've kind of been calling it to Laura and my friends at work. I'm trying to reach property neutral. So we pay for our mortgage in Hoboken, and my goal is to have the cash flow from my rental properties cover the cost of my mortgage, so that I basically remove my biggest expense and live for free. That's like my short-term goal. Okay.
And you have loans to pay for the properties you've invested in, right?
Yeah, I've been financing everything because, one, I get an enormously higher return. I'm comfortable with the risk. And two, I get to depreciate the full value of the asset, even though I only paid for 20% of the asset. So I'm not paying any taxes on it.
Okay. So the cash flow essentially covers the mortgages or the loan you took out for those properties, and then your own mortgage. That's the goal.
Exactly. Yeah.
Awesome.
I have a question for you, Gary. Last question. Do you own any rental properties?
I do. In fact, I bought one a few months ago through Roofstock, and it's maybe a good example to compare to your property. So I bought a property in Cape Coral, Florida, for $152,000, and the rent was $1150, and so the gross yield on that one was, call it 9%, and the gross yield is just the annualized rent over the purchase price. And the net yield in the kind of low fives, 5.3% after all the expenses on an unlevered basis. So, which I was comfortable with because it's a nice house in a nice area, and I felt like there was, and based on our rent comparables that were on our site, it looked like it was underpriced by a couple of $100. And I knew the lease was coming up and there'd be a chance to release it at a higher rate. So I bought it. And the tenant moved out. We found a new tenant immediately. They moved in at $1,400. So it was able to raise the rent even higher than we thought from our rent comps by about $50. So it's actually $1,399. So now my gross yield's more like an 11. And almost all of that additional rent flows through to profit. So now my net yield's probably in the mid to high sixes, maybe approaching 7% on that property. And that was one of the things that I thought was interesting, because as I was looking around, I was looking for a property that I might be able to buy based on sort of the current income, but that might be a repositioning opportunity because it might be under rented. And so that's the kind of stuff you could do on our site. I love it. I've had a great experience with that. We used one of our local property managers. I just kind of went through it as a Roofstock customer. It was early. So we're much better now from a customer service standpoint and a system standpoint than we were in the early days. But I actually closed my home in 14 days from when I hit invest on our site, and I bought it with financing. And closed it 14 days later. So it can be done pretty quickly.
Did your property management company find the tenant for you? And how long did it take?
They did, one weekend. So they had an open house, and we had about 15 people show up at the open house. We had, I think, 4 or 5 people fill out an application at the open house, and they just sent me an email and say, we've got your house lease. We're able to lease it at $1,399 to tenant with great credit, and we think they could be a long-term renter. And I said, great. So it was really painless.
I actually have one last question, for real this time.
This is your third last question.
This is my third last question. So you bought it. The cash flow is awesome. How concerned are you about appreciation or the value of the property itself, or if it's cash flowing positively, not so much?
Yeah, I'm looking, for me, I'm less current cash flow driven. I like the fact that it's cash flowing nicely, and I'm getting a good yield because I'm not getting yield pretty much anywhere else in a lot of my investments. So I like that. And I also felt like it was a good value relative to fair market value, and it's in an area that's forecasted to appreciate pretty well over the next 5 years. And again, forecasts are what they are. But directionally, I think it's right. So I do think that home is probably going to be worth $200,000 in a couple of years. I think it's already appreciated meaningfully from my purchase price. I do plan on holding it for the long term, so I don't have any immediate need for it. But it's nice to know that you've got now a fair amount of equity in that home. Could also refinance it in a couple of years based on a new value if it does continue to appreciate. Take some money out and probably be able to pull out enough money to buy another home. So that's kind of how I'm thinking about it there.
Awesome. Gary, thank you for coming on the show. It's been a great conversation. And Andrew, we have a link for Roofstock, right? For those folks?
Yeah, so if you're interested in Roofstock, you can go to Roofstock by listenmoneymatters.com/Roofstock, or you can just go to Roofstock and they have a little drop down and just, give us some love. Say you came from LMM. Yeah. Also, on the real estate note here, we have our own real estate tool that launched really recently.
which you can find over at realestate.listenmoneymatters.com. And that will let you evaluate real estate properties and determine if they'll cash flow. So it's a really cool research tool. And Andrew, good job on this thing.
Thanks, man.
It's amazing. You showed it to me before we got into this call, and I was just like, geez, it doesn't look... I've always thought of Listen Money Matters as kind of like a blog podcast. This doesn't look like that. This is like legit.
Thanks, man.
Math thing.
I've been trying to evaluate properties I want to buy on Roofstock, and then before Roofstock, and my buddies are, and then you have to like kind of track things, and it's all happening in these mangled spreadsheets. And I was like, hey, like why don't we just like automate this and use data? Because that's my day job.
Boom. Cool. Well, once again, guys, thank you so much for listening, and we will see you in the next episode. Later, Gary. Later, Andrew.
Later,
Thanks,
man.
guys. All right.
Please tell your friends about this show.